This episode is brought to you by Mortgage Workflow Partners and the Mastering Encompass series, both for users as well as administrators. You can find out all the information about it over at masterengencompass.com. Also, if you'd like to check out what we're doing on YouTube, go ahead and subscribe to the channel using the @MasteringEncompass handle. And make sure you stay up to date on all the information, not just with podcasts, but also video content that we bring to you as often as possible. Now let's get on to the episode. Hey everyone, Larry Bailey here, bringing you another weekly newsletter. This information is brought to you by MBS Highway. Get over to mbshighway.com for your own subscription and check it out directly. More importantly, it's brought to you from the Mastering Encompass as a user and also as an administrator platform. You can find out all this information over at masterengencompass.com. Most importantly, if you're a YouTube user, please head over to our channel on YouTube, and that's at Mastering at Encompass, and go ahead and click subscribe. We're trying to get to 500 subscribers so we can bring to you some very awesome members-only information. So check it out over there, and again, head over to Mastering Encompass on the YouTube channel and subscribe, please. Let's get into this newsletter review. This is the week of July 15th in review. Home builder sentiment remains below a key threshold, while there was an important caveat to the rise in construction projects last month. Plus, more signs are signaling a slowdown in economic activity. Read on for these stories and more. First story is home builder sentiment held down by higher rates. The next story is construction activity boosted by multifamily projects. Next story is retail sales remain flat. The next story is initial jobless claims hit a 5-week high. And the last story here is the latest LEI and Beige book suggest slowing economic activity. As a reminder, if you're listening to me on podcasts, thank you. You can also listen to us over on YouTube. You can also make sure you watch the entire video replay by heading over to mortgage.community and checking it out there. First story is home builder sentiment held down by higher rates. So we're getting this information from the National Association of Home Builders. And we're seeing this very soft graph going up and down, and this is all about confidence. So confidence among home builders remains below the key break-even threshold of 50 per the National Association of Home Builders, also known as the NAHB. As their housing market index dropped another point to 42 in July, this marked the third consecutive monthly decline and the lowest reading since December, as higher interest rates continue to dampen sentiment. Scores over 50 to this index, which runs from 0 to 100, indicate that most builders feel confident about the current and near-term housing market outlook, whereas lower readings signify there's less optimism among builders. Bottom line in this story, gang, is though all three index components, which consist of buyer traffic, current and future sales expectations, remain below 50, the NAHB's chair, Carl Harris, noted that, quote, "The 6-month sales expectations for builders moved higher, indicating that builders expect mortgage rates to edge lower later this year as inflation data are showing signs of easing," close quote. Chris, your mouth to God's ears. Let's hope rates ease and hope that you're right. We could all use more construction. Which brings us into the next story, construction activity boosted by multifamily projects. So you've heard me talk about the last few weeks about how multifamily projects have been replaced by single-family lower-price homes, which brought down the median home sales price. If you have no idea what I'm talking about, that's okay. Let's go ahead with this story. So we see a nice graph on here, and this is information from the U.S. Census Bureau and HUD. And after a disappointing May, new home construction ticked higher in June as housing starts and building permits both came in above estimates. Woohoo! However, the increase was led by a boost in multifamily projects as starts and permits for single-family homes both moved lower. Bottom line here is softer than expected construction activity this spring could limit much needed supply down the road, especially among single-family homes. This bodes well for appreciation and shows that opportunities remain to build wealth through homeownership. What that sentence is really saying is, gang, if you want to get in real estate and you are not sure about it, make sure you're working with a mortgage professional who can explain to you what you can afford, explain to you great ways and ideas and methodologies on how to get into real estate. Always be vigilant, always ask questions, always ask for everything in writing. But yes, homes continue to appreciate, which again is all good on paper until you go to sell, right? And that's when it matters. Here's the next story. Retail sales remain flat. Retail sales stayed flat in June, though this was better than the outright decline that had been expected. Sales in May were also revised upwards from the originally reported 0.1% gain to a 0.3% gain when compared to April. Bottom line in this story is while this report was better than estimates, there has been growing evidence that consumers are spending more cautiously in the face of rising unemployment and a slowing labor market. The Fed will closely be watching retail futures sales reports as the strength of our economy will impact their monetary policy decisions this year. As a reminder, the Fed has a dual mandate, right? So they're always watching monetary policy and employment. So that brings us into the next story where initial jobless claims hit a 5-week high. Another 243,000 people filed new unemployment claims in the latest week, marking an increase of 20,000 from the previous week and tying the highest level since early June. Continuing claims also rose by 20,000 as 1.876 million people are still receiving benefits after filing their initial claim. What's the bottom line? The pace of layoffs continues to move higher, as does the number of people who have already collecting benefits. Plus, the latest initial jobless claims reading was an important real-time report because it includes the sample week that the Bureau of Labor Statistics, also known as BLS, will use in the modeling for their job growth estimates for July's job report. While this is just one component of the high reading of 243,000, initial unemployment claims could point to a weaker job growth when July's report is released on August 2nd. So we'll see how that plays out. There have been growing calls for the Fed to cut their benchmark Fed funds rate at the meeting on September 18th, given signs of cooling inflation, rising unemployment, and softening job market. Labor sector data released between now and then, of course, will play a pivotal role in this decision. We shall see. Here's the next story. The latest LEI and Beige book suggests slowing economic activity. So the Conference Board released their latest leading economic index, that's the LEI, which takes a broad look at the economy and tracks where it's heading in the near term. June brought a 0.2% drop, which followed May's upwardly revised 0.4% decline. So in this story, the bottom line is the U.S. LEI continued to trend down in June, but the contradiction was smaller than in the past 3 months. That was a quote explained by Judicin Zabinska-Lamonica, and I'm sorry that I totally butchered your name, but Senior Manager of Business Cycles Indicators. The Conference Board predicts that a, quote, economic activity is likely to continue to lose momentum in the months ahead, close quote, with cooling consumer spending pushing, quote, GDP growth down to around 1% annualized in Q3 of this year, close quote. All this information, it's a lot of obviously macroeconomic information that not a lot of people pay attention to, except of course the Fed. But this correlates with the Fed's latest Beige book, which is a survey of economic conditions around the country. 5 of the Fed's 12 districts reported flat or declining economic growth, which was up from only 2 districts 6 weeks ago. So we had 2 districts 6 weeks ago reporting flat or declining economic growth. Now we've got 5. You kind of hopefully you're seeing the pattern here. We'll see where this leads. Gang, this brings us to the spot of the family hack of the week. This is the National Peanut Butter and Chocolate Day. That's July 23rd. And if you want this recipe from All Recipes, head over and watch the full video walkthrough. It's around the 8-minute and 15-second mark, and you can check it out there. Here's what we're looking for this week. More housing reports are ahead, guys. Keep an eye on this because with June's existing and new home sales released coming out on Tuesday and Wednesday, respectively, you're going to look for the first reading on the second quarter GDP and the latest jobless claims on Thursday. And then Friday, when we get there, we'll bring the most crucial report of the week via the Fed's favorite inflation measure. You know it. It's your best. It's your friend. It's coming back. Personal consumption expenditures. And it will tell the Fed some more tea leaves that they're going to be reading about what to do in their September meeting. My name's Larry Bailey, and again, courtesy that this week's episode is courtesy of Mortgage Workflow Partners and Mastering Encompass. Head over to masteringencompass.com, head over to YouTube, and please subscribe to that channel. You'll find it by searching for Mastering Encompass. You can't miss it. It's the only one out there. You guys have a great week. We'll catch you next time.